Choosing a market maker is one of the highest stakes decisions a token project makes, and most founders go into that first call without knowing what to ask. So they ask about price, get a number, and sign. Here are 10 questions that actually separate one desk from another. I work at a market making desk, so yes, we get asked these. The good ones we're glad to answer, and any serious firm should be too. Use this as a checklist on your next call. Quick note, this is education, not financial advice.
Question 1. The fee model.
Question 1, and it's the one that changes everything else. Which fee model are you proposing and why that one for us? There are two dominant structures. In a retainer, you provide the capital, both the stablecoin side and the token side, and you pay a monthly fee for the desk to operate it. They work through API keys on your accounts. They never take custody of your tokens. In a loan model, the desk borrows a percentage of your supply, typically 0.5% to 2%, brings their own stablecoin capital, and usually charges no monthly fee. The supply is the payment. Two things founders miss on the loan side: the contracts are long, a year or two, and at the end, the desk generally chooses whether to return the tokens or their dollar value, whichever suits them at that point. Neither model is automatically better, but ask for both, priced side by side in writing.
Question 2. The commitment.
Question 2, what exactly are you committing to in numbers? Will provide liquidity is not a commitment. A real one has 4 parts. Target spread, how tight and held, how consistently. Depth, how much size sits within 1% of price on both sides. Uptime, what percentage of the time your quotes are actually live. And venue coverage, which exchanges specifically. Get those 4 in the contract, not the pitch deck, and ask what happens if they are missed, because a commitment with no consequence attached is a hope, not a commitment.
Question 3. TGE day.
Question 3, walk me through my TGE day, hour by hour. This one is a lie detector. A desk that has actually done this 100 times will answer immediately and specifically. Books preloaded the night before, who's watching in the first minutes, how they handle price discovery when there's no agreed price yet, how they absorb the day one selling from airdrops and early backers. A desk that answers vaguely or promises a smooth chart is telling you either they haven't done it much or they're promising something nobody can promise. Nobody controls the price on day one. What they can control is whether the book holds.
Question 4. Who actually works on it?
Question 4, who actually works on my token? How many traders are on the desk? How many will touch my book? And are they available during my listing window across time zones? Every firm's software looks great in a deck. The difference shows up when something unexpected happens at 3 in the morning on a venue nobody was watching. If you're a launch stage project, ask directly whether you get senior attention or whether you're a small line in a system built for large caps. Both answers are legitimate businesses. Only one fits a first listing.
Question 5. Reporting.
Question 5, what reporting do I get and how often? You should be able to see spread, depth, uptime, and venue by venue activity on a regular cadence, not a monthly summary that says everything is going well. The reason this matters is simple. Those are the same numbers exchanges use to judge your listing. If you can't see them, you can't know you're drifting toward a warning until the exchange tells you. Ask to see a sample report from a real engagement, anonymized. A firm that reports openly is one that expects to look good in the data. Question 6, how do you handle exchange compliance? Every serious exchange monitors its listed tokens on depth, spread, activity, and uptime, and tokens that fall below the thresholds get flagged, then warned, then delisted. A delisting announcement alone can cut a token's price 20 to 40% within 48 hours. So ask, do you monitor those thresholds for me? Have you brought a flagged token back to standard before? And what did that take? This is one of the least discussed parts of the job and one of the most expensive to get wrong.
Question 7. Venue strategy.
Question 7, which venues will we be on and who decides? Liquidity spread thinly across 10 exchanges is worse than solid depth on 3. A good desk will have an opinion on venue sequencing for your token size and will say no to venues that don't make sense yet, even though more listings sounds like more progress. Ask how many venues they cover in total, then ask which ones they'd actually recommend for you and why. The gap between those two answers is where the real advice lives. Question 8, and founders forget it until they need it. How does this end? Contract length, notice period, and in a loan structure, exactly how and when tokens come back. What happens to the option if you terminate early? Who owns the historical data on your own book? This isn't pessimism, it's basic diligence. The terms you can walk away from are the terms you can negotiate. An engagement you can't exit is an engagement you'll stop being able to hold to its numbers. The last two are the ones I'd never skip. Question 9. Can you show me the metrics on a token you currently quote? Not names, not price charts, the spread and depth profile. Any firm can describe a healthy book. Fewer will show you one. Question 10, and this is the important one. What results are you promising? The correct answer is uncomfortable and honest. A market maker manages market structure, spread, depth, uptime, execution quality. A market maker does not move your price, create demand, or guarantee volume. If anyone promises price performance, guaranteed volume, or a particular chart, walk away because delivering that would mean doing something that gets both of you in trouble. Practical advice for the call itself. Send the 10 questions in advance so you're comparing prepared answers, not improvisation. Talk to at least 3 firms, because the second conversation is where you learn what the first one didn't tell you. Get the numbers in writing and take the answers to your own advisors and notice how they treat the questions. A desk that's glad you're asking is telling you something about how the working relationship will feel for the next 2 years. The right market maker for a large cap is the wrong one for a first listing, and the reverse is just as true. There's no best firm. There's the firm whose model, stage focus, and reporting match what you're actually building. These 10 questions are how you find out which is which. 2 things in the description if you want a head start. 1, a written breakdown of the leading market makers in the space, what each one specializes in, and the trade-offs of each model. 2, a full guide to what market making actually costs, both pricing models with real ranges because almost nobody in this industry publishes their numbers. Both are free, both are linked below. We're EchoTrade. We've supported more than 2,000 token launches across 90 plus centralized exchanges with 20 plus traders on the desk around the clock. If you want to hear how we'd answer all 10 of these for your project specifically, the link for a free consultation is in the description too. Subscribe. We break down how crypto markets really work, one piece at a time.